Hi everyone, hope you're all doing well, and today we're going to talk about HUYA. So you guys wanted to see this on the poll that we did a few days ago, as well as the free stocks to buy. So here we are, we're going to do a bit of a deep dive for the first time for a little bit into HUYA and see what's going on with this company, because it does feel like it's broken. This company is moving in the wrong direction, but when you look at the company, fundamentally, it's pretty strong. In fact, pretty is not probably the best word, it's amazing, and the company is putting in some really good financial performance. The fundamentals haven't changed in this company, and realistically we don't know what's going on. Well, we kind of have a few ideas why it's maybe not moving in the right direction, and we will be talking about them, but everything else, fundamentally, this company is getting stronger and stronger, but the stock price is moving in the wrong direction. And in fact, it's probably the only stock in my portfolio really that isn't really performing. Don't get me wrong, it is kind of a newish investment. I guess it's kind of coming up to 12 months since I've started holding this company. When I do buy companies for the long term, after the 12 months period, I do expect them to start kicking on. So hopefully this one coming up to 12 months will start to move in the right direction in the next few months, years, as I do invest for 2 to 5 years, 100% return, and I am holding this one for coming up to a year, so I do want this one to start moving in the right direction. But everything that's going on with the company and everything that's going on with the share price, it's just really weird. So we're going to be talking about it today. So if you could smash the like button, if you're new and you find this video helpful, please make sure you subscribe. And we're going to be talking about the price, the stock chart, we're going to be talking about the growth, the balance sheet. We're going to compare it to a similar kind of company. It does have a little bit more growth than HUYA, which is Bilibili. We're going to talk about the merger, which is probably one thing that, bit of a giveaway spoiler, is what's probably holding the share price back. And also, if anyone from HUYA is watching this, hopefully you watch this video, and towards the end I'll talk about what I want to see from HUYA going forward, as I think that will help the shareholders be a little bit more happy, and also I think will also help the share price as well. So what I'm going to do now, guys, is I'm actually going to go across to my laptop and share a few screen recordings with you guys. So what I'm going to do now is I'm going to share with you some things that just prove how well HUYA is performing, but the share price isn't reflecting that, as well as some talk on the share price as well. We have kind of covered this on the Patreon a few times. I haven't just covered it on the YouTube channel really, but we are doing that today. But if you do want to see stuff on the Patreon, like when we've talked about HUYA previously, then a link in the description to join that Patreon group. We have a Discord on there. We do 2 exclusive videos there every week. We do private live streams, portfolio reviews, education video series as well. Yeah, and it's £5 a month. I think it's pretty good for what you pay for it, I guess. There's 600 members on there as well, and if you do want to start investing, there's some links to some brokers in the description, like Free Trade. You join through there, you also get a free share as well. But let's get on to HUYA and talk about why this is just broken. This company is broken because it should be moving in the right direction, and it's not. So we're going to have a look at the stock charts just to start with. So the crazy thing, I think the first thing to go on with is, let's just talk about, since it's been on the stock market, the IPO. You look here, 11th of May 2018. The stock here, first day closed, $16. Now, don't get me wrong, it did have a little bit of a shoot up in the month of the IPO. A lot of IPOs do tend to do that, and then it came back down to reality. But just put it on the point of view, the stock was, on its first day of trading, came on at $16. Now that's 11th of May, so we are pretty much 3 years now on, and the company is now $14. This company is less than what it was on IPO. Now you can argue, okay, there might be, shares outstanding might change a little bit, and there's not much in it, but it's pretty much the same. So this company is literally valued at less than what it was on its IPO, and it's crazy. It is crazy. There's a few points here you can see when it does tend to get around to this kind of 16, 15 here, this low here, even the CV, and that's 13, 15 again. This company does not tend to go much lower than around about $15. So for me, I am looking at this company going, now, I just can't see it going much longer. This company, the lowest it went, peak CV was $13. I can't see this company going much lower. There might be a chance that it does move, a little bit lower, but realistically below $14, I just can't see it. It's just incredibly, even history tells us it doesn't go much lower than this. Little interesting point though that I did kind of notice is it does seem to peak out around about this $28 mark. So that might be something, just a very hard resistance point for HUYA to get past, might be the $28 mark. That's just something that I've noticed, and I thought I'd share with you guys. But realistically, lows wise, I don't know how much lower it can go But the main point I'm trying to say is that the stock doesn't really go much lower than this. Now, we did get caught up in this kind of growth stock rally. It is pulled back absolutely huge since then, currently trading at $14. I think, in my opinion, anywhere between $14 to probably $22 is probably a decent price really for this one. It is a 3.5 billion market cap company. Now, in this time, you would think, okay, the stock price hasn't moved, but when we actually look into the financials in a minute, what happens is, when you're buying a company, buying a stock, you're buying part of that company. What I would say to you is, if you look at 2018 and it's $16, you'd think like the company hasn't done much. Like, you won't think the company's developing. But if I said to you, actually, and we'll get onto this in a little bit, this company has an even better balance sheet now. This company now makes profit, and the profit is ramping up very quick. And the revenue has grown a huge amount since this IPO. And it's the same price. It just defies logic. If you have a company, you're buying a company, your company makes more and more profit, your company has more and more revenue, there is no way your company should be valued at the same price as what it was 3 years ago. It would not make sense, and it doesn't make sense. And this is why HUYA stock is broken. The company is currently valued at 3.5 billion. It's currently at a P ratio of 25. So we are picking up a company here at 25 P ratio, the cheapest, by the way, it has ever been on a P ratio. And the other thing as well is that the profit is growing, and when we look at the forward P ratio in a second, it's just gonna blow your mind. Anyway, so what I thought I'd do is we'll just actually go through. I'm actually just at the moment doing a trial on HUYA. It's actually a really good platform. The only problem is it's so expensive. I think every month it's like $500. Yeah. So I don't know if I'll probably get it I don't think I'll probably get it, but what it is, I can see why it's worth a bit of money. It would be better if it was a little bit cheaper, but it's an amazing platform. I don't know if any of you guys actually use this, but yeah, I don't know if I'll be getting it, but it's a very cool platform. Anyway, if I just go into HUYA and I go on the revenue side of it, you can see here, this is 2016, 2017, 2018. Can I just highlight this across? No, I can't. Here, 1.2 billion. 1.5 billion. So this company is the revenue growth on it, you can see just moving in the right direction. And let's not forget, this company is now, the company is valued here. When it IPO'd, it put in 705 million, coming off of 323 million a year. This company now is putting in 1.5 billion. This company is doing double the revenue what it was doing. This revenue growth is, in my opinion, absolutely amazing. Even on the adjusted EBITDA, look how much the adjusted EBITDA is going. And also, if I go on the operating income, you can see the growth on the operating income as well. And on the EPS side of it as well, the EPS is just moving in the right direction as well. So this company is valued, when you look at all these, when you look at the, even if you look at the gross profit here, the gross profit moving in the right direction as well, you can just see that the company is growing in the right direction all the time, and the share price is not reflecting that, and it's so strong growth. And even if I can go onto a valuation point of view, so this is the P ratio history. You can see here the valuation, obviously it's making more and more profit, so the PE is dropping, but the price is staying the same, so it's just getting cheaper and cheaper. And you look here, look at the HUYA PE dropping down here, it's now a 26 P ratio. And let's not forget, July there, 116, down to a 26 P ratio. It's just really cheap. And if I just go on a price to sales ratio here, you can see like the price to sales ratio is dropping. We're down to a 2 price sales ratio. And a 2 price sales ratio on a company that's growing profit, is a growth company, amazing balance sheet, just looking so cheap. So from them point of a valuation point of view, it's just getting cheaper and cheaper. And if I just go onto HUYA and the actual forward P now, the forward P here, 15 forward P ratio. Now, this is so cheap for a growth company. If you're buying a double-digit growth company at a 15 P ratio, forward P ratio, if you're buying a growth company in general, if you buy a growth company in a teen range of a forward P, it's extremely cheap. And this is what we're seeing right here. And the thing is as well, is on the balance sheet, which I'm actually going to talk about the balance sheet a little bit later on as well. The balance sheet is just amazing. So if we just look at the balance sheet here, look at this cash equivalents. It's just, 67 million, 103 million, 159 million, 504 million. And there's pretty much no debt on this company. This cash balance is just growing at a huge amount of rate. And it's just amazing. You look at what they have on here and the equity that's growing. It's an amazing balance sheet as well. Such a clean balance sheet. And we've got a very healthy company here. So just to compare that against another kind of Chinese company that's a bit more, obviously, HUYA, streaming is growing huge, especially on the gaming side of it. We know it's in a big, massive growing area, will continue to grow. Bilibili, very similar, kind of like a bit more of a YouTube style, whereas HUYA is more like a Twitch. Bilibili is more like a YouTube kind of style platform. And this is a company that I actually found back in 2018, and I made a really good amount of profit on it. Should have held it a bit longer. I should have held this, this company, at the peak was up a crazy amount. I mean, it's still up loads here. And back in the time, 2018, nobody talks about this company. Like YouTube, really, for the stock market, was still kind of in its early days. No one talked about Bilibili. Even a lot of the analysts weren't covering this stock. And I looked at it and I thought, this is a really good opportunity. Went on to make some good money. I probably should have held it a lot longer. Now, don't get me wrong, this company is growing a lot faster than what HUYA is doing. So when we look at the revenue growth here, you can see that the revenue is growing at a huge rate, whereas HUYA is more like a 20%, 30% kind of growth company. These guys are growing, 50%. Last year was even better than that. It was 100% year, which was fantastic, even 100% here. So you are picking up a really heavy growth company, which will obviously trade at a lot higher valuation. But you can see here the losses are getting worse on this company. So it comes down to, how much growth do you want to pay up for, where the company is still losing money. So I think this one is always going to trade at a little bit of a higher valuation to what HUYA is. But remember, you are getting a really good profit company now with HUYA, but just to compare that as in comparison to the valuation of what HUYA is currently at. So obviously there's no P ratio, but even on the price to sales ratio point of view, we're trading at a 19 price sales ratio. Don't forget, HUYA was at a 2. We're at a 2, and this is company, this is never, I don't think this has ever been at a 2 price sales ratio. This is when I looked at it and it was like a 5, and I was like, this is pretty good. Obviously the valuation has just gone higher and higher on this, but it just shows you, how much is growth worth. You can buy Bilibili that is, putting amazing amounts of growth. It's always going to be a high valuation than HUYA. But okay, you get less growth, but at the same time, you're getting profit. And how much is that, worth less than what HUYA is? For me, HUYA should be trading a bit higher than what it is right now. I've always said, for me, HUYA is probably somewhere between, at these prices, 150% to 200% undervalued. Back when it's about $18, $20, maybe it's 100 to 150% undervalued. It should be somewhere between probably around about a $40 stock for me. And it just shows you, compared to another company that's very similar, look at how cheap this is compared to a very similar company that's a Chinese company. I'm not using a US stock here, I'm using a Chinese company. Just kind of shows you. So with that all being said, you can see the company is fantastic, financially performing, valuation very good, balance sheet very good. So why is it so cheap? Why is this still going down? Why is it broken? Why is it moving in the wrong direction when it should probably be moving up? Well, there's only one thing to put it down to, and that is the merger. The merger is supposed to be with Douyu, which I think would be amazing because you get both companies together, both revenues together. You have them, they're both in the same industry. They're kind of competing with each other, bigger market share. So I think if they were to have Douyu, it would be really good. Now, it doesn't have to happen because HUYA, as you can see, on its own is performing financially amazing. And in fact, before the merger was even announced, the stock was actually performing very well. You can see this was actually the run-up until where the merger was announced. And we were doing very well. And this was the impact of the merger. And then we had the growth stock boom. And then funny enough, it kind of carried on that trend. So the merger is kind of causing uncertainty with investors because investors don't like uncertainty. They don't know if they're getting Douyu, they don't know if they're getting HUYA. And let's not forget, the merger terms for HUYA actually weren't that good. That's one thing to be aware of. But in the long term, it will benefit HUYA. It's just in the short term, it wasn't that good. And people want to kind of know, okay, am I buying HUYA? Am I buying Douyu? Am I getting both of them? And uncertainty isn't good for investors. And especially when you look here, we're talking this merger has been kind of going on now for 6-9 months, really. quite a long time. And when they did eventually like announce the merger, I was like, to close in Q2 2021 is far away. But I thought, you know what, it might be done sooner than that. We'll see what happens. But it has taken that long. And it's that uncertainty for such a long time has kind of, not really attracted new investors. In fact, the uncertainty has even attracted quite a few shorts as well. They're kind of loving this uncertainty as well. And we are still in Q2. There's 30 days to go. The merger still might happen, but there's not much coming out of HUYA. Even on the last earnings report, there wasn't much new information that came out about HUYA. But what we kind of know is there is some problems about allowing the merger to happen because of the Tencent side of it and having a monopoly. Now, like I say, in HUYA's terms, they said Q2, it could still happen in Q2. Personally, I don't think it will happen because I think it would be done by now, but that's just something to be aware of. And hopefully it gets sorted, because the quicker I think it gets sorted, gets rid of that uncertainty and attracts new investors in, we'll see exactly what happens there. So I guess that kind of leads me to my last point, which is what do I want HUYA to do? If me as an investor, what do I want them to do? And this is what I said earlier, if anyone from HUYA actually comes to watch this video, from my opinion, what would I like them to do? Well, from my point of view, I think the merger is creating uncertainty and it needs to get done. Whether that's with HUYA and DouYu merging together or not, it just needs to get done in this quarter. If it doesn't get this quarter, we need an update from HUYA. What is going on? It can't get dragged on much longer than this, and that's one thing that management needs to sort out. And as well as that, we could do with a little bit more update from HUYA with what's going on in the situation. Even on the earnings call, we didn't get given that much. So I would like management to be a little bit more on top of it. Tell us what's happening. Let us know if it's going to happen or not. Like I said, they did say Q2, and it is Q2, so it could still happen. I just don't think it will do, but we're not getting fed that information, which is another thing. But I think when this merger is done, obviously the stock will move in the right direction, because it's financially, as what we talked about earlier, it's performing. Valuation is just crazy cheap. Another thing that I would like management to do is one thing that I would love management to do now is when we go back onto that the cash balance. The cash balance is amazing right now. What has HUYA got at the moment? At the moment, it's got a stock at dirt cheap prices, and it's got cash sitting there, a lot of cash sitting there. What could happen, in my opinion, what would be a very good move with HUYA right now, is rather than paying, I think this all depends on the merger, because I think there's obviously the merger, and that might go through the cash a little bit. But if HUYA merger doesn't happen, which hopefully they'll sort out very soon, or even if they can do it right now, in fact, because they do have a lot of cash, is go buy back shares. HUYA at the moment, as far as I'm aware, doesn't buy back its shares. And the shares outstanding have gone up slightly, nothing much, just a little bit. Start buying back shares. They are dirt cheap, and as an investor, that will really benefit us. And as well as that, from the management side of it, be very aggressive on the media side of it. Start posting, okay, we are now increasing our share buyback. We are starting a share buyback of how much, whatever they want to do. And then 3 months time, okay, we're increasing our share buyback. A few months time, we are increasing it again. Start pumping out positive articles, get investors interested, and start squeezing them shorts a little bit. As well as that, the merger. We need it sorting. We need to have the merger closed or cancelled by the end of this quarter. If you think you can get it done and you need 3 more months, then okay, I'll let it go. But after that, I've been in this stock for 12 months. It needs to start performing coming up. Through the back end of 2021, 2022, this stock needs to start performing. Now, sometimes that's out of control of the management. They're doing the best, they're performing financially, but we do need to, as an investor, the share price does need to start reflecting what's going on with the company, and I do think it will happen. But this is just what management can do to help the investors and the share price. Be more aggressive on the media outputs, update with what's going on with the merger, up to time. Like the only information we've got is from Seeking Alpha, which is inside sources, what's going on. So yeah, we kind of need regular updates on what's going on with the merger and start pumping out share buybacks, and make sure you really play on that you're doing that, is what I'd love HUYA to start doing. I don't know if, they're probably not going to see this video, but that's one thing that I would love them to start doing, and what would really help us as investors. But going overall to my final point, which is today, covering the HUYA stock, I can't make it any more clearer that I'm still very bullish on this company. I am down like 28% or something on this company. I am considering buying more shares. We'll see what happens. But while I'm down 28% and I'm looking at this company and I'm thinking fundamentally nothing's changed, in fact it's just stronger and stronger, it's still performing. I still think it's dirt cheap. I still think this company should be, a $30 stock, fair valuation. Ideally, I think I can get, up to $40 on this stock. I think this company is massively undervalued and performing very well, and it's just disrespected. And I think that once we kind of get this uncertainty out of the way, I think it will kick on, because it is a quality company, is what I've shared with you with the financial side of it. And that's my overall opinions with it. Still very bullish. I still think it's, I've multiple times I've reassessed HUYA, and every time I go, nothing's changed. It's still a great company. And that's still my thoughts at the moment. And I'm still continuing to think that this should go up in value in the next 2 to 5 years. Obviously, I'm kind of, 1 year into this one, coming up around the summertime, I guess. And yeah, it should start performing. So we'll see what happens. Hopefully we get some, like I say, the Q2 was a merger. We are in Q2. We'll see what happens, and that will be the big thing to keep an eye out for as an investor. But yeah, I'm still massively bullish on this company for sure. And hopefully for you guys that wanted a HUYA video, hopefully there was enough information in there for you guys and you enjoyed it. All I ask for is if you could smash the like button, and if you are new and you watch this video for the first time, maybe give a subscribe as well. That'd be absolutely amazing. But yeah, hope it was everything that you kind of wanted on a HUYA video, and I'll see you in the next video.